Ben Reppond. Welcome to my YouTube broadcast. Today is March 20, 2024. The stock market has been mixed in the last week or so. We've had a number of down days and some up days. The net effect has been kind of neutral, not forcing the broad market to go up much or down much. It has been kind of a head fake to tactical managers and probably frustrating for some buy and hold managers. Bonds have generally speaking been going down. Gold and precious metals have been mixed, but in general, recently, in the last couple of weeks, have been going up. Bitcoin has clearly been going up, and now it seems to be retreating some. So there are just mixed messages all over the place. What direction is the Fed going? There's two different points of view, maybe three: up, down, or neutral. So it's for investors, it is not a clear environment. So I will try to unpack this for you and show you the detail behind what I just said. So let's get into the dashboards. Okay, the first dashboard covers equities and one bond ETF. So the top 6 lines are ETFs, exchange traded funds, for equities. And this includes 4 from the US, the S&P, the Dow, the NASDAQ 100, and the Russell 2000 small cap index. And the 5th one at the bottom is the long-term government bond ETF, TLT, which has been quite a bit down for the week and from year to date. It is just negative all over the place. As you look to the right, you see the dots, the green dots and the red dots. The green dots show that these ETFs are above or below their moving average. Most of them are above, but we are now going from all greens, nearly all greens, to more reds. So we have 21 out of 28 that are green. And there were 28 out of 28 last week. So because bonds had such a horrible week, it moved the bond index, the ETF TLT, down below all 4 of its moving averages in 1 week. Wow. So these are ranked from, in the pink box, from top to bottom, best to worst, year to date, which would be about 2.5 months. That would be the S&P 500, the NASDAQ 100, the developed markets with EFA as the ETF, and the Dow Jones, DIA, emerging markets, EEM, and the small cap Russell 2000 small cap index, IWM, and then TLT as at the bottom for the long-term government bond. So you see that some of them that have been negative this past week are now starting to cross below their 20-period moving average, and all of the equity indexes are still above their 50, 100, and 200-day moving averages. The sectors inside of the S&P 500. So we see that, okay, for the week, the S&P 500 was negative. We saw that. Now let's look at what happened inside of that. And we see that in the yellow box, the positive ones were energy, financials, basic materials, and consumer staples. All defensive stocks. I put financials in the category of defensive stocks. Growth stocks were all negative. So on a year-to-date basis, you've got energy, number 1, up 9%. That's a defensive stock. Financials, up 8%. Industrials, technology is 4th as a growth sector. Healthcare, basic materials, consumer staples, heavily, except for technology, heavily weighted in defensive stocks, or you could say value stocks. At the very bottom is real estate and telecommunications, which were, for the week and year to date, decisively negative. And there are 35 out of 44 for the week that are positive, and last week there were 39 out of 44. Okay, so now let's look a little more macro. Let's stretch it out to 18 months, look at a chart, and this is the S&P 500 over the last 18 months on a weekly chart. One move equals 1 week of data. So you can see from October of last year, so this is almost 17 months, about 17 months, to today, or through last Friday, March 15, generally speaking, the market has been going up. So if you look from endpoint to endpoint, you can see clearly an upward trajectory. And this past week was slightly negative, but mostly kind of flat. It gets a little more dicey when we look inside of the S&P 500 and we say, okay, what about the growth stocks? What about the value stocks? Let's do a relative strength chart separating or comparing value to growth or growth to value. Numerator is growth, denominator is value. So when it goes up, that's going to favor growth. When it goes down, that's going to favor value. So you can see from the beginning of 2023 until present, so this is about 14 and a half months, you can see that generally speaking, it's gone up, but much more volatile, much more up and down than the previous chart. So there are periods, like for example, from October to the beginning of 2024, so that'd be about a 3-month period where value stocks were clearly in favor and growth stocks were clearly out of favor. And then you see this period where it changed. Beginning of January, growth stocks came into favor, and now it's pulled back. Value stocks are now in favor. Where's it going to go? I don't know. I just know that it's, for now, I would say in a short-term view, value seems to be in favor. When we compare large companies, S&P 500, the 500 largest companies, to the 2,000 smallest companies, the Russell 2000 Small Cap Index, IWM, and you can see that generally speaking, because the large companies are the numerator, normally speaking, they're moving in an upward trajectory, meaning that large cap is in favor relative to small cap. Now, this is not relative strength. This is the long-term government bond. This or some type of government bond is usually part of a buy and hold 60-40 portfolio. The duration in the bonds or the bond index ETF or mutual fund is maybe oriented to intermediate term or could even be short term, but a lot of times it's intermediate term and sometimes it's long term. This is the long term chart. So when this says that the very end, the very far right corner, you can see that the tick down tells you that the bonds have been going down. And long term, over this long period, bonds have been going down. There are short-term periods where they go up and then they collapse. Why? Because interest rates are going up, or there is the expectation that they're going to go up, which is driving bond prices and bond ETF and fund prices down. What that's doing is putting pressure on the 60-40 buy and hold portfolios, and they are showing either negative performance or lackluster performance. So if you're in one and you're saying this is not going anywhere or it's going down, that's why. Now look at the dollar. The dollar is generally going up, kind of the opposite direction. The strength of the dollar relative to other currencies is going up. And there is, as you see at the very far right, a tick up, showing that the short-term direction is up and the longer-term direction is up. Gold has had an excellent past few weeks. It pulled back this last week a little bit. So gold's still in an upward trajectory. Silver, however, did not have a pullback. It had an excellent week, pushing it to new heights. So it has struggled more in the past couple of years relative to gold, and but now it is showing a resurgence. And if you're a holder of silver and you care about whether your silver goes up or not, this would be good news to you. I personally don't care because I don't buy silver for an investment. I buy it for an insurance policy, and I don't care if my insurance policy went up or down this week because I hope to use it if I ever need it. Hopefully, I don't. Hope to use it as a means to barter with if the dollar becomes worthless. There are people who believe that that's going to happen. If it does happen, you need something of value, intrinsic value, to barter with. Again, I hope we're not going to be in that period. That'll be hard for all of us, but I choose silver for a number of reasons, but as an investment, that's not one of them. Now, when I compare silver to gold, silver being numerator, gold denominator, and you just saw gold went down a little bit, silver went up a lot. So when we put a relative strength chart on it, we say, this has gone up and down a lot. So recently, the last tick up, you see at the far right of the chart, okay, that's silver relative to gold. It obviously went up quite a bit because silver went up a lot and gold didn't. So, but that's the current direction. The longer term direction or intermediate term direction for silver versus gold is it's still in a declining period. Bitcoin took a breather and did not go up and or went down slightly, but it has been in a longer term upward trajectory. I don't like to make predictions on what things are going to do in the future, especially Bitcoin, but I can say for now it's been in an upward trajectory. The volatility index, even though the equities more often than not went down. I showed you the various data, and the volatility index went down a little bit. So usually when equities go up, this comes down. When equities go down, this usually goes up. And so more often than not, equities went down a little more than they went up, but the volatility index came down some. So it's at 1441. The low is in the 12s. And you see my mark there at 24. That's my threshold where I believe high volatility starts to kick in when this moves up above 24. But we're quite a ways away from that. Asbury Research had 4 of their indicators. I believe they were different ones last week, but there were 4 that were positive and 2 were negative. And so that's the same this week. 4 positive, 2 negative, which generally indicates a positive environment. The cross-asset relative performance compares different asset classes. So I look at, in the 3 columns to the right, or the last week, the last month, the last quarter. So I look at those that include all 3 of them and compare them. So low volatility versus high beta or higher volatility stocks. Low volatility is more in favor, which favors defensive. Large cap, more in favor than small cap. We saw that. And the broad market, the S&P 500, more favorable than the NASDAQ 100 for the last week, the last month, the last quarter. Bonds, high yield, more favorable than corporate, and short-term treasuries more favorable than long-term treasuries. Again, all of this shows kind of a tendency or a trend in moving more in a negative direction or more in a value direction. The U.S. versus the world. So the ones that favor are doing better. These are the markets, not the economy and not the currency. So the markets that are better for the last week, month, and quarter than the U.S. are Peru, Italy, Germany, France, Eurozone, and Taiwan. The ones where the U.S. has done better are than those in those same time periods are Brazil, Hong Kong, India, New Zealand, and Australia. I put this together to show you on a relative strength basis the U.S. versus another country. I picked one in the Eurozone. I've been showing Switzerland. It still is a good comparison. So I'm showing U.S. versus Switzerland. Not much change this last week, but you can see since May of 2023 that the U.S. market, represented by SPY, is doing significantly better than Switzerland, and I would say the Eurozone in general. And the ETF is EWL for Switzerland. Gold and silver. The price of gold, the spot price of gold was $21.53 as of last Friday, which is down 1.1% from the previous week, previous Friday. Silver is $25.16 spot price, up 3.5% from the previous Friday. The gold-silver ratio has dropped from 89 to 1 down to 85 to 1, moving. It still favors silver as a better value, but it not quite as much as it used to because silver is starting to go up in price. As of this morning, as of this recording, again, gold is down slightly and silver is up. So it's continuing the trend that it had for the previous week. A monster box of silver has risen from in the 12,000 range up to 13,125. This is a box of 500. The markup is still low. The markup is $1.09. And all of my years of buying silver, going back to 1990 at least, I have never paid less than $1.10 markup over spot. Here it is, $1.09. That's quite low in my experience. The cost per round in a 500 round container just for generic silver is $26.25, including the markup. When you go to one of these single tubes of 20, the total price is $26.75 per round for using quantity of 20, and that includes the markup. Thank you for watching. If you have questions or comments, leave them in the comment section below.